Hello and welcome everybody to today's webinar presentation, How to Trade Commodity Currencies, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will of course be going through live market analysis. We'll go through a watch list of trade ideas. We'll go through analysis of where we're expecting gold, silver, crude oil, the commodity currencies to be heading next. We will be answering questions and of course providing live support as well. So before we get into it, let me just introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For further information on our services, just go to www.jointhelivetradingroom.com. Also, if you haven't done so already, we have just put out a fresh report on gold today and yesterday on crude oil as well. So do make sure you're also subscribed to the Gold and Silver Club YouTube channel. That way you get updated on our reports during the week too. So do make sure, if you haven't done so already, that you go onto YouTube, search for the Gold and Silver Club and just make sure you're subscribed so that you don't miss out on all of our latest reports and forecasts too. Okay, good. So with that, today's focus is going to be on the commodity currencies, but we also want to just have a look at the narratives in the market and how that really interlinks with what's going on with respect to commodity currencies at the moment. So first of all, we have the dollar today, which is slightly flat actually at the moment. We're seeing foreign exchange traders holding off from making big moves as they're weighing news about progress in the trade talks between the United States and China. In fact, we've just got some breaking news which came out about 15 minutes or so ago, which is basically as follows: that China's Commerce Ministry have said they will take necessary retaliatory measures if the US decides to raise trade tariffs on May the 10th. So they are already getting ready for retaliation, and as such, that can certainly put some pressure, well, on the dollar to the upside, but it can pressure equities and also crude oil and a number of currencies to the downside. Something which you may, I'm very sure you know this already, but if you don't, is that, and we saw this on the weekend, any escalation in trade war conflicts between the US and China would have an immediate negative impact on US equities and also crude oil to the downside, as well as put pressure on the Australian dollar, the New Zealand dollar, both of those being commodity currencies, and often you will see the US dollar rally as a safe haven. It's exactly what we saw last year during the summer during peak trade war tensions. Often the beneficiary of the trade war tensions is the US dollar, and gold as well does tend to get the safe haven bid too, but not so much priced in gold versus the US dollar if the US dollar is full on breaking out. So what we have here, this is really the main narrative that everyone's watching at the moment. We've seen the diplomatic cable from Beijing arrive in Washington late on Friday night with systematic edits to nearly 150-page draft trade agreement. So the whole point now is that they're saying Donald Trump has basically started to, I guess, add to the narrative of the market that they're now looking, or the US is looking to put trade tariffs on China because China have backtracked on almost all aspects of US trade deal. So that's what this is all about, really, essentially being triggered from the bombshell that Donald Trump dropped on Twitter from Sunday, that he was looking to propose tariffs on Chinese goods, and this has really caused this fallout. So US looking to hike tariffs on 200 billion worth of Chinese imports. So this is obviously going to have a huge impact to the markets and to China. So they have come to the table with edits on nearly 150-page draft trade agreement that would blow up months of negotiations between the world's two largest economies. So this is what is, according to the US, now starting to spark this rift again between the US and China. Now, today we've also had oil inventories data being a Wednesday, so US crude oil stocks, they fell surprisingly last week, even as refineries cut output, imports dropped. So the Energy Information Administration gave that data today. We have actually seen oil start to get some support off the top of that. I don't know how prolonged that move will be with oil, given the trade war negotiations are still very much in the backdrop. But at the moment, we're seeing some positive momentum to the upside, retesting the upper end of the trend channel. Now, gold has risen in anticipation of trade war concerns unnerving the markets over this week. It broke out to 3-week highs earlier on in the session. In fact, we put out a very detailed report about gold earlier on today that you wanted to look at, essentially trading the range. So we're looking at a range at the moment of the 1270 zone up to around 1291 to 1292. We hit with precision the upper end of the range today, breaking out to 3-week highs. And we suggested that could be an area you'd look for selling opportunities on gold. And in fact, as soon as it hit that level, it sold off over 120 points, breaking back down to 1280. As I mentioned in the report as well, the best way to trade gold right now is very simply trade the range. So look to sell around resistance at 1290, buy in back at support near 1270. So that still holds true. And now we may see a rotation for gold back towards the lower end of the channel, which tends to sit closer towards the 1270 zone. We'll have a look at that together very shortly on the charts. So now moving over to really the subject of today's session, which is going to be focused on the commodity currencies. So what do you need to know here? Well, a commodity currency, it's the name that's given to currencies of countries which depend very heavily on the export of raw materials for income. In the foreign exchange market, commodity currencies generally refer to the Australian dollar, the Canadian dollar, the New Zealand dollar, the Norwegian krona, South African rand, Brazilian real, and Russian ruble. Canada produces a large quantity of commodities. That includes natural gas, timber, oil. That makes Canada's economy very sensitive to commodity prices. And Australia, of course, is one of the world's most natural resource-rich countries and has large holdings of gold, iron, coal, and aluminium. And therefore, Australia accounts for a third of global iron ore and global gold production. It means Australia's fiscal revenue is very sensitive to changes in metal prices, and based on the intermarket relationships, the Australian dollar has that tight correlation with iron ore and gold prices. So when gold is selling off like it is at the moment, you tend to see that have impact on Australian dollar as well. When iron ore and gold prices go up, Australian dollar and iron ore, Australian dollar in particular, often goes up. So when iron ore and gold prices go down, Australian dollar goes down. So there's that tight correlation between those markets, and that's very tradable as well. And you've got very strong correlation with New Zealand dollar and Australian dollar, because the New Zealand economy tends to depend quite heavily on Australia. So if Australian dollar is selling off significantly, it will follow through to the New Zealand dollar and vice versa. Then you have the US dollar, Canadian dollar. So Canada is the 6th largest oil producer in the world, about a quarter of whose exports are oil. That makes Canada's economy very sensitive to oil prices. So fluctuations in oil prices, they can be traded via US dollar, Canadian dollar. We've got that inverse relationship with US dollar CAD. So when oil prices go up, US dollar CAD often goes down. And when oil prices go down, US dollar Canadian dollar often goes up. So that's also very tradable too. So with that, we'll move over to the markets and we'll talk you through what we're seeing at the moment and really just some of the trade opportunities which are developing. I think first of all, let's actually take it over to crude oil. So I'll share my screen with you. You should be able to see that very shortly. Okay, so I'm on oil at the moment. Okay, just double check that you can all hear me okay and you can see the presentation okay. Fantastic. Thanks very much, Reese. Okay, good. So we're back on WTI crude oil here. Right, what I would suggest, and we put out a very detailed video on this yesterday just on our YouTube channel as well, but basically what I'm looking for over the course of this week, this is my range that I'm looking for. I'm looking for 63 resistance, which we hit actually on Monday. I'm looking for 60 as support within a 300-point range, okay? So we hit that. We actually gapped down on the open on Monday, fully retraced, surged back up to 63. Since then, we've been finding some resistance. We are below the midpoint of the Keltner channel, which is where the price spiked out up to on Monday. We are finding resistance also at the 8-day exponential moving average. Each time oil is rallying up to that level, it's been unable to break above. You can also add this downward trending channel as well to oil. That will help you with your trades being on the right side. Okay, so having a look at that, then what I would add to this analysis, and it's relevant to both Brent and WTI crude oil. In fact, here's one I did earlier. So basically, what you want to bear in mind at the moment is oil since the beginning of the year, okay, where it broke out from January, it had a 40% move to the upside, okay. During that whole period, it was a buy whilst the price was above the midpoint of the Keltner channel and the 21 MA. That was a perfect zone to keep buying back into oil. Buy here, buy the dip, buy. And you look to buy the dip during that whole period, okay. And then what we've seen is accumulation of net long positions since February, which just every single week from February onwards continue to drive higher. So hedge funds bought every single dip, every week, commitment of traders day to continue to go up until last week, until we actually broke and closed back below the 21 MA, put on this previous level of support, term resistance. So now we've had a good buy kiss of oil here. We came back up, rallied to a previous level of support, term resistance, and found resistance at the 21 MA. Now the price is below that for Brent crude oil and WTI crude oil. So now I'm more interested in shorting oil than long until it breaks and closes back above that. You also have this channel as well for oil, which we're coming back ahead. We're retracing back to that level. If oil rolls over, breaks below the swing low, it could start to pick up further momentum to the downside. So that's what I'm seeing at the moment for oil. If we look at WTI crude oil as well, same to be applied really. It had a bit of a retrace earlier on today off the back of the oil inventory data here, but you can see it has now broken and closed back below the 21 MA for a few days here, back below the midpoint of the Keltner channel. And again, you've got this overhead level of resistance that we're contending with. So basically, traders who are looking to trade this market over the course of this week have sold into the retracement higher today. We've still got market a little bit unhinged about whether we're going to see trade tariffs increase later on in the week. As such, you're seeing crude oil get hit here. So we're seeing a retracement. So that's really what we're looking at the moment, guys, with respect to oil. And to me, that looks like it could roll over, break back down, and could make a move back towards the 60 level later on this week if trade war tensions do increase. No follow through at all here from the breakout from oil inventories data. So those who would have potentially bought in earlier on in the session, they're now under some pressure. We're seeing a retracement lower. Then if we look over to gold, gold to me, you can see this breakout to the upside, 1292. We had the range this week of 1271 up to 1292, 210 point range. We pretty much come all the way up to that anticipated resistance zone. We put this out on a very detailed video today on YouTube. Check it if you haven't done so already, that we should potentially rally up to that level, but then look out for resistance, sellers to come back in, which is what happened here. So you've got a false breakout to the upside. You've got a bull trap. Now, gold is very quickly giving back those gains, and now it could develop into a sell short, taking the price back towards 1270 for tomorrow, when usually dollar strength comes back into the market on a Thursday. That's what I'm looking for now. You can see that very clearly. Reversal on gold. That's the way, in my opinion, to play this at the moment. Look for tomorrow, dollar strength to come back in. Now, this is very interesting data on the dollar, so bear this in mind. Write it down if you need to. Put it on your trading calendar. 90% of the time so far in 2019, the dollar has rallied on a Thursday. Bizarre statistic, but true. So if you go over to your positions, for the most part, if that happens again tomorrow, you would expect potential bear flags to set up and for gold to break down back below today's low tomorrow, break below, come back towards the next swing low, and weekly pivot around 1270 for gold. That would therefore mean the US dollar would potentially break out tomorrow. There you go, US dollar picking up momentum again at the moment. Euro would therefore potentially roll over. There you go, inverse hammer off the 21 MA. That could easily pick up momentum to the downside and roll over back towards the swing lows. That's picking up momentum now. Look at that. Look at that go with the euro now, 1.118. So we're moving nicely back into profitability with the euro US dollar. Oh, there we go. Yep, it's just taken a hit, 1.187, turning bearish for the day. So good timing. So we're seeing what normally happens develop again here. It's incredible how often this happens. So US dollar just picks up momentum later on in the session on a Wednesday, leads into a breakout for Thursday, as we seem to see nearly every week at the moment. That will put pressure on the euro. That will put pressure to the upside on the US dollar Swiss franc. It would likely rally. You'd see New Zealand dollar roll over. In fact, it broke back below the swing lows. Third test of support, broke back below it. Australian dollar could then pick up momentum. I actually quite like Australian dollar for a sell short here, breaking back below the swing lows as well. I can see that definitely happening tomorrow. Pound is definitely under pressure here. Another Thursday sell off on the cards for a break back below the weekly pivot, back towards the swing low to the downside there. So that's what I'm looking at the moment, guys. Gold to potentially break down further tomorrow. That would also lend weakness to silver too, which could break back down and hit the monthly pivot as well. So for me, it's textbook right now what's happening. It's taken a while for this to come to fruition this week, because normally this is where it starts to pick up momentum as you get towards the end of the session on Wednesday and then you develop into Thursday. The most important point in my view right now is the dollar strength we could see tomorrow, because that will dictate what happens on a lot of currencies. Right now, it's interesting because you have majority of retail traders in the market. They've gone long Australian dollar, expecting a bounce here, thinking they've got right in at support here. I'd really watch out for that. It keeps breaking, closing back below the 8-day exponential moving average. That could easily roll over tomorrow and take out the swing lows. It's been the same with the New Zealand dollar. So you've had a very strong portion of the market, retail market, has been long. New Zealand dollar trying to pick the low, and classic overnight, come back down, third test, and just flushed out all of the stop losses here. And then we've seen this big reversal, but basically all of the retail traders getting taken out. Normally, if a price reverses back like this, back to a level of support, it takes out the previous swing low. So I think that will happen with Australian dollar. We'll roll over, we'll take out the swing low, especially if trade war tensions do accelerate later on this week. The Australian dollar often does get hit, so with the New Zealand dollar, and I could see that certainly happening with the pound rolling over, breaking back below the 1.3 handle and closing below it. Got a nice sell signal developing actually on the pound at the moment. The euro could then pick up momentum. I'm selling the euro at these levels, so I'm in at these zones, guys. If you're looking for trade opportunities, the euro, put that on your radar. I'm selling here on the euro in anticipation. Well, it's already a sell signal anyway, but I'm looking for more downside on this tomorrow. Basically something like this tomorrow. Nice bear flag setting up for that. We just keep trading these multiple bear flags. Easy. Just keep, every time we get these bear flags set up, just show you that. Normally it happens on the Wednesday through to Thursday. They just sell time and time again. Multiple bear flags. Okay, so you can see here. This is just since January. 1, 2, 3, 4, 5, and then we've got the potential for the next one to line up here as well, like this. You can see it's already moving down as I'm discussing it. So there we go. That's what I'm looking for. So dollar, there we go, 97.40 back in business on the dollar. So that's springboarding off the ATMA. If that can just break above yesterday's high, that will help. But I'm basically long the dollar at the moment, and that's back in profit now. So that's looking good. I would look at US dollar Swiss franc, by the way. Most retail traders are shorting this market at the moment. So that means if it breaks out to the upside, it will very likely stop a lot of traders out who are selling short, and it could really build up momentum, especially if it breaks above the swing highs there. US dollar Swiss franc could be one to keep an eye out for as well. I think oil could actually pick up momentum to the downside if we do see trade and an escalation in trade war tensions. Silver and gold look vulnerable to more downside, especially platinum as well. Looks like it wants to roll over and break down lower. And finally, I just put on your radar Bitcoin. For those of you that have been following all of our cryptocurrency webinars with binary.com, you'll know that we've been very much on the side of the bulls here with respect to Bitcoin, and we're almost at the level that we've been predicting and forecast for $6,000 to get hit. If you missed our previous webinars, go on binary.com YouTube channel, how to trade cryptocurrencies, and we discussed in detail where we were within the cryptocurrency markets, that we were expecting the low to have been formed from the 16th of December 2018. Look out for $6,000 as the next target. We're almost there. In fact, on some exchanges, the price has already got there of $6,000, but we're very close to that at the moment on the MT platforms right now. So with that, I hope that helps, guys. I hope that gives you a bit of a sense of what we are looking at right now, how to really trade the commodity currency markets. As I mentioned, if you haven't done so already, hop on YouTube after this session and search for the Gold and Silver Club. Make sure you subscribe to our channel so you kept updated with all of the latest videos. If you do actually want to join us at the Gold and Silver Club, the link is www.jointhelivetradingroom.com. So basically, as a VIP private member, you get access to our exclusive live trading room webinars throughout the week. You get real-time trade alerts, real-time trading research and market insights, private members academy website access, and access to support and one-to-one mentoring. Okay, so with that, again, thanks to Sharice, the team at binary.com. We'll definitely catch you back here on the next one, guys. And I wish you all good trading. Okay, so take care for now. All the best and bye for now.